I'm David Scranton, and thanks for watching. You know, we only have a few weeks left in the year, so the question becomes, what does 2022 hold in store for the financial markets? To help us, let's bring in today's guests. Jeff Small, president of Arbor Financial Services, a retirement income store located in Melbourne, Florida. Jeff, it's always good to see you here and getting your help on the income generation.
Dave, I love being here with you. Can't wait to talk.
Great. And I know you also can't wait to talk to our today's special guest, Jon Najarian, options trader and co-founder of Market Rebellion. He's also co-author of the book, Follow the Smart Money, and making a special effort to join us today from O'Hare Airport. Jon, great to have you back on the show.
Well, it's great to be back with both of you guys. And given what's just happening in the markets with nervousness over Omicron and, of course, Fed, I'm excited to discuss these with you.
Well, speaking of that, Jon, since the last time you were on the show, the equity landscape has changed so significantly. And so we have all of these new looming threats that can affect what's going to happen to risk assets next year, whether it's the Omicron, the Fed raising rates too rapidly in an accelerated fashion to quell inflation, supply chain issues, overstretched market valuations. Give us your take. I can't wait to hear your thoughts.
Well, Jeff, you're exactly right. The stretched valuations and the Fed do play right in, like hand in glove, because a lot of those tech companies are the ones that are really making hay while the sun shines. They are and have been borrowing aggressively, even if they have big cash holdings like Apple and a number of the other big techs do. But if we start seeing the Fed moving up on rates dramatically, which, by the way, I don't think we're going to see, I think that they're going to do the taper aggressively, which they have said, but I don't think that they're going to get more than one rate hike in 2022, perhaps two done between 2022 and maybe the first quarter of 2023. So I don't think that is what derails us. And as far as those high flyers, Jeff, you've already seen the likes of Square coming down from like 290 to 160. You've seen a pretty significant sell-off in a lot of those high flyers.
You know, there is no historical precedence for where we are today and how we look at the stock market going forward over the next 12 to 24 months, other than the market's overstretched. And so for our viewers and for our listeners, where can they find value next year? Is it in high yield? Is it in fixed income? Is it in banks? Where should conservative investors in an older mindset be investing today?
Well, I think you hit on all of them really right there. Banks, yes, because I think the bond market will move up rates more than the Fed will. And so the beneficiaries will be the likes of Morgan Stanley. Why them instead of Bank America? Both will benefit, but Morgan and Bank America both will have those margin loans that you guys know about from an investor that decides instead of buying 1,000 shares of a stock, they'll buy 2,000, and that second 1,000 will be bought on margin. Not a lot of paperwork necessary for that. Once they have that account open, it's not like a mortgage where there's a stack of papers like that people have to fill out. So I think they get an immediate benefit of higher rates. And I would say keep an eye on some of the utility stocks, because if they get hit, Jeff, in the early first part of 2022, I think they will be very much a focus for the rest of 2022, because my belief is the Fed is not going to be able to move on rates very much.
You know, I agree with all of that. But I think, like you said earlier, the tech sector is going to get hammered pretty hard in the first quarter. We'll see where it lands. For our older clients, though, we like things that generate interest earnings, don't we, Dave?
Absolutely. Jeff, Jon, thank you both for spending time today.
Thank you, David.
Thank you, Dave.